got the chat box there if you want to ask any questions or say hi. You can make sure you can hear us all. And we're just waiting for everyone else to get started.
We've got a few late stragglers, I think, coming in. At least they're starting to come. So welcome everybody. We're just about to go live. We were going to go live right now, but I think we might just give it a 30 seconds or so. See that number creeping up. Hi everyone. Just drop in the chat and say hi. Oh, hi Michelle, yes, hi, say hi, where you're from, how you feeling, what's up? Okay, Kelly, I think we'll get going. Yeah.
Yeah, perfect.
Good. Fantastic, everyone. Thank you so much, everybody, for joining. Really excited to take you through today. It's all about how using QuickBooks and Clarity can help you double your clients' profits. And everything we're going to talk today about is based on methodologies and frameworks that have worked in practice, work and continue to work in practice. So this isn't any fluffy, woolly nonsense. This is absolutely sound, practical help that will enable you to effectively double your clients' profits. It's a big claim, but hopefully by the end of this, you'll understand how you can do that too, using both QuickBooks and Clarity to help you super scale. So what's happened? Well, I found this really, really interesting quote from Andy Gove, and this goes back a number of years ago, and he was talking about the cloud. And effectively, what he was saying was, we're at an inflection point where nothing less than a fundamental shift in business strategy is sufficient. Now, that's absolutely been particularly relevant for accountants, particularly relevant to the cloud. But I think that quote still stacks up to date. But I think we can just go one step further than that. I believe we're at a defining moment. This is, I'm sure you'll agree, a defining moment. If anybody who's listening doesn't agree this is a defining moment, then jump in the chat. We'll more than happily discuss it with you. We're very relaxed presenters, so do take notes, do join along, do participate. I'm going to, I suppose I'm used to cajoling a crowd live and face-to-face, so I'm going to try and do my best to make this a more fun and bubbly Zoom webinar than maybe some of those that you've been to. So this is definitely a defining moment. As an accountant, are you content to continue to report on history? Or are you going to listen to what your clients are desperately looking for, what they've been asking for the last 6 to 9 months? And are you going to help them create history? Help create magic for them, add value to them, help them improve their businesses, and at the same time, do the same for you. So I hope that's what you're on for today. That's what we're promising. So let's get started and let's get stuck in. But I want you to, before we get there, to just imagine. Imagine if your clients were to say to you, no accountant has ever taken me through anything like this before. What if your clients were to say to you, it's like you've lit a fire underneath me. I've never been so excited about my business. Or if your clients were to say to you, this is so exciting, we can't wait to get started. Can you imagine how that would make you feel? How that would make your team feel? And this is what we're about to talk to you through today and take you through, so that you can completely change the relationship with your clients and completely change the way you do business with your clients and help them create a magical business to go forward. So I hope you're all up for that. We're all up for it. Let's move on. Now, one caveat before we really get started. This is not just about technology. Technology is an amazing tool. It's not the panacea. It's not the silver bullet. It is one element of the process. It does the heavy lifting. It will never replace people. It will never replace that emotional intelligence, that connection between people. So technology is useful. We'll show you how technology does the heavy lifting for you and takes all the drudgery and hard work out of it, and effectively enables you to scale what you can do with your clients, enables the team to get involved, and with the correct processes and systems wrapped around. So it's a combination of all three that are required to positively deliver added value services at scale that your clients get value from, can afford, but that you can deliver profitably as a firm too. So if you've got any questions, please just jump them in the chat. Kelly's here to manage the chat for us. She's going to be interrupting me, stopping me in my flow. So don't worry. Don't wait till the end to ask questions. We're happy to deal with them as you go along. So if you agree with anything, then great. If you don't, great. Just let us know. And when you respond, there's a little tick arrow, so you can reply to panelists, which most of the people have been doing so far. And that's okay. If you want to keep it between us, that's great too. But if you just want to also include all and attendees, then the attendees can get to see the chat too, and everybody can participate together. This is, after all, great collaboration. So a little bit of an introduction to Kelly first, and then I'll introduce myself. Hi, Kelly. Do you want to introduce yourself?
Hi, everyone. Yes, I'm very excited about this webinar today. So I have been with Clarity for 4 or 5 months now. I started in August, and before that I was with QuickBooks for 2 years. So I still have a passion for QuickBooks, and I love that I'm part of that partnership and still working with the team at QuickBooks. So that is a little bit about me. Before QuickBooks, I was at Sage, so I've been in the industry for a little while now, and things are going fantastic at Clarity. So it's good to see some familiar names on the webinar today, and hopefully we'll get to chat personally soon.
Thank you, Kelly. For those of you who don't know me, my name is Ainsley Damery. I'm the CEO of Clarity. I'm also an accountant. So when I talk today about us and we, I'm talking about it and including me because I've been there as well. So having left KPMG, I built and sold my own multi-award-winning, multi-million-dollar revenue accounting firm. Now, when I joined that accounting firm, it specialized in compliance-only services. So that was accounts and tax returns. And over the years, I took that from a compliance-only practice to pretty much a niche business advisory practice where every client got business advisory services. And we focused on delivering that to high-growth entrepreneurs and small business owners. Now, we won a huge number of awards for the way we did business. We were very early adopters of cloud back in 2009. I've probably tried every single piece of software that's out there. So I completely understand and can accept and get the tech overwhelm at times and how sometimes it's difficult to introduce technology and drive that change through organizations. We won a huge number of awards for innovation and the way we did business, particularly brand and culture. But the technology, the awards that we won for innovation from a technology perspective weren't technology for technology's sake, but how we leverage technology to deliver a better client experience and for better client services. So hopefully we can take you through some of that today. Those are some of the awards we won, including Firm of the Future International. We were international runners up in the Intuit's Firm of the Future a number of years back as well. So relevant to today. Now, let's get stuck into the agenda and fire off. So I want to just give a brief introduction to us. Primarily, the whole session today is about focusing on your clients, but at the same time, understanding how we must fit our own oxygen mask first. And much of the things we'll be talking about today are relevant to you as a firm too. So whether you're a firm owner or whether you're managing a department or whether you're just managing your own portfolio or your own budget of clients, then the things we'll be taking you through today are not just for your clients, but also will affect you and your job, your firm, your department, your area too. So please get involved and get into those questions. So let's get started in a brief introduction to who we are, a little bit about Clarity. So our purpose is to give every single small business owner clarity so that they can build a better business for themselves, a better life for their family and team, and ultimately contribute towards a better world. Our whole ethos was we're built by accountants for accountants. We've created a business advisory solution and a whole range of processes to enable you to create, package, price, and deliver business advisory services. Delivering business advisory services that add value to small business owners at a price they're able to afford to pay and also in a profitable way for the firm. So that's profitable for the firm, adding value to your clients in a way that is affordable to those small business owners. And we're going to take you through a process that's a multi-award-winning process, a framework that exists in consulting firms worldwide, and take you through that today. As an organization, we've been very lucky. We launched last year in September 2019. And since then, we've been lucky to pick up Xero's App Partner, Global App Partner of the Month in November 2019. We were their finalists in Emerging App of the Year for 2020, and we're also finalists in the Accounting Excellence Awards, which are due to be announced next month, again for forecasting, planning, and analysis software of the year 2020. So not bad for a young start. But as I said, it comes from years and years and years of practice. We know what accountants need to be able to survive and thrive in this world, and that's effectively what we've set out to do. And we'll take you through that model on thriving as well for the firm, not just for the business owners. So what are business owners looking for? Good question. Should be easy to answer. Well, let's, before we do that, start with a little bit of, I suppose, kind of positioning around why small business matters. Small business is big business. It represents 99.9% of all business in the UK. Now, if you're coming from outside the UK here, I'm not sure, I haven't looked at the list of attendees for a little while as they were coming in. If you're coming from outside the UK at the moment, then it's pretty much 99.9% of businesses in your jurisdiction too. Certainly if you're coming from the US, Canada, Australia, New Zealand, South Africa, pretty much similar numbers that we're seeing across the world. Most Western economies, huge. So it's about 30 million small businesses in the US, for example. So absolutely huge number representing most of businesses in the developed world that are registered effectively. And in the UK, it's almost 2/3 of all private sector employment and almost 50% of all private sector GDP. So again, pretty similar numbers when we look at other jurisdictions around the world. So big business is absolutely huge business. But unfortunately, the survival rates across the world for small business are pretty low. In the UK, it's actually only 4 out of 10 businesses survive 5 years. When we look at Australia, New Zealand, it's 5 out of 10. So slightly higher stats that they have. But that's really quite shocking when you think about it. And when we go out to 10 years, those numbers are pretty hard to find. But anecdotally, anywhere between 1 and 3 businesses survives that 10-year cycle. And that's pretty much because economic cycles flow in that 10-year cycle. So, you know, you might do well in the up times when times get tough. And by Jove, we've seen that over the last 6 to 9 months, how tough times have been. It's really hard to stay in business. But if we look at it and try to understand this, what are the main challenges facing small businesses? Now, here we're not looking at the macroeconomic factors. We're not looking at regulatory factors. We're just looking at the challenges within their sphere, within their scope, within their room to play, within their control. And the first big one are within our control too, I should say. The first big one is that business is complex. The world is complex. It used to be 10 years ago that operational excellence, so doing everything the best for your industry, and great customer service pretty much gave you a winning margin. It put you at the front and it gave you a great ability to generate profitable and scalable returns. But now, operational best practice and outstanding customer service really just get you to the starting line. Everybody expects that nowadays. Our expectations in business are growing and growing and growing. Business is getting harder and harder than ever before. And particularly, we've seen that in the last 5 years, if not in the last 6 to 9 months alone. Now, we're also in a very volatile, as we can understand, VUCA world. So that's volatile, uncertain, chaotic, and ambiguous. And that's a military term for how one develops a strategy, a warfare strategy in a volatile, uncertain, chaotic, and ambiguous world. It's not the same as it was in the past. We can't have command and control structures that take ages for information to flow backwards and up and down the chains of command. We've got to make decisions fast. We've got to act quickly. We've got to pivot and change and make decisions and understand those decisions and understand what those decisions are doing to our profitability, particularly in a business environment, and what it's doing to our cash position too. Now, we know our clients are drowning in information. Everybody's drowning in information. We're being bombarded on all sides: social media, news outlets, emails, newsletters, you name it, is flooding our sphere. And to actually break down all that information, we are, as business owners, we are starving for knowledge despite all that information. And as accountants, we need to understand that giving our clients more data and more information is not necessarily helpful. It's about giving them bite-sized pieces of information, breaking the data down for them, giving them simple, actionable strategies and simple data that they can take action on. That's what's really, really critical. So it's stripping back the complexity and making business simple in a way. It's giving them those bite-sized pieces that they can actually understand and take action on. So a real, I suppose, lesson for us as accountants. We love data. We love to give our clients more data, but by drowning them in even more data, we may be absolutely missing a point here. We might need to be careful on the level of data we give them. Now, cash obviously is a huge issue as well for most businesses. We know this. The stats show that most businesses fail because of a cash flow shortage. In fact, 64%, I think, in recent studies have failed. Businesses that fail because of cash flow or lack of access to cash flow. Now, that's the symptom. It's not the actual cause or the underlying reason for that failure. Most small business owners don't have cash. So startups don't have cash. They borrow from credit cards. They borrow from friends and family, mom and dad, you name it, to get going. And growing, scaling businesses consume cash. It's the law of business. Business eats cash. Most small business owners don't understand the difference between profit and cash. How many of your clients say to you when you give them a set of accounts, I couldn't have made all that profit. Where's all the cash gone? Classic response from a business owner. We need to help our small business owners understand the difference between profit and cash and the movement of cash in their business. And we inherently know that as accountants. We understand and get a feel for that. And this is why short-term cash flow planning and always focusing on cash flow forecasting as a tool, as a response to the current environment, may not always be the best play. Looking and running your business by looking at your cash balance is like driving your car looking at the fuel tank. You're going to crash the car. Exactly the same in business. Cash and shortage of cash is a symptom. We need to understand the entire business model, and the whole role of management is to turn assets into sales, sales into profit, and profit into operating cash. The most important type of cash, operating cash. As accountants, we know that cash flow statement: operating cash, financing cash, investing cash. And how often do we tick that exemption box and say, don't prepare the cash flow statement, it's not needed? In fact, we're probably doing our clients a massive disservice by not showing them the cash flow statement and getting them to understand that cash. And if you do nothing from today other than make sure that you now always prepare a cash flow statement with those year-end accounts and with your management accounts, so that you can show clients the difference between profit and operating cash, and show them the importance of operating cash and turning profit into operating cash. So again, an amazing ability for us to help small business owners. We have that in spades. We understand the movement of cash in their business and how to accelerate that. And we also know how to get access to the right cash at the right price. Growing businesses can rarely sustain and scale from existing reserves. They need to often look outside the business, whether that's invoice finance, whether that's asset financing, whether that's loans, investment, or maybe even ultimate exit to get the business to the next level. So this is about you knowing the cost of capital, the cost of cash, and understanding and helping business owners get access to the right cash at the right price too. The third big challenge we see is that most business owners don't get their numbers. And this is often twofold. In the UK, we've seen that only 20% of businesses, and small businesses that is, get regular management information. And that, in the era of cloud accounting, is really quite woeful when you think about it. But if you think about your small business clients, and it'd be interesting if you jumped into the chat box, how many of your small business clients get management accounts? So if you could put that in, is it 20%? Is it 30%? Is it 100%? Because I know some practices do that. So if you just want to jump in the chat and let me know how many of your clients, your small business clients, get management information regularly, that would be really cool. Well, the numbers are coming through again. Sorry, you're sending them to panelists, which is fine. I have no problem with that. But if people think I'm making this up, I'm seeing 10% from David, 25% from Jignesh. Those are pretty much the standard. And when we're looking at an average of 80-20, 20% seems to be a good enough number, and certainly from what we're seeing here. So absolutely, 20% is about the ballpark. Now, interestingly enough, and I probably won't ask anybody here to jump into the chat to tell me this, of those people that are getting management information, how many of those accounts are actually reflecting long-term work in progress or long-term contracts, accruals, prepayments, adjustments for revenue recognition? How many of those management accounts are a push of a button from QuickBooks, for example? Or how many have we actually done those adjustments and taken the choppiness out of those management accounts and given that information on a proper, I suppose, accruals basis? It'd be really, really interesting to understand that too. And I bet that's probably dropping down to maybe more the 5% mark when we see that. So business owners aren't getting management information. If they are getting management information, it's potentially not valuable management information for them to make accurate business decisions. And yes, I'm seeing 4 or 5%. Absolutely, that's the norm. How many of our clients are getting management information to make proper business decisions? And this is what this is about. Now, the other side of not getting their numbers is most small business owners don't understand numbers. Numbers are the language of business. Accounting is the language of business, as Warren Buffett said. And as accountants, we inherently get the numbers. We get percentages, we get numbers inbuilt in our psyche. And I think we often take for granted that our small business owners understand the numbers as well as we do. And when we chat to them about their accounts, often they're nodding at us. And we take that as they agree. Most times they're nodding because they're afraid to say to us that they don't understand what we're talking about. And this isn't just small businesses as well, by the way. We see big boards and people that are on boards that are not understanding financial information, not getting numbers on big boards, and they are looking to the CFO and nodding and seeing if they're happy with the numbers for them to sign off. And the last big challenge we see is planning. Most small business owners don't have a business plan. And again, I'm not going to ask you to jump into the chat because this will definitely be at the 5% or lower mark. How many of your clients have a financial plan, a budget, a cash flow forecast, a 12-month plan for their business? How many of them have projections? It doesn't have to be three-way, even a simple 12-month P&L projection of what's going to happen for the next 12 months. Most small business owners spend more time planning their holiday than they do in their business. And we know planning is critical. It doesn't mean that the plan's fixed. It doesn't mean that we're going to change the plan going forward. It just means we have an idea of what success looks like for the next 12 months. We know how we're progressing against that. We know if we're on course or off course. And particularly not just for our firm, but for our clients too. Because as a firm, we should be having a proper plan for the next 12 months, a proper strategy, a proper financial plan, actions, and numbers that show us where we need to go and what we need to do to be able to achieve that. Now, if you think about it, nothing in the world gets created without a plan. So nothing, whether it's a piece of art, whether it's a structural building, or whether it's an engine, everything needs a plan. So this is about us making sure that our clients have the right plans to be able to drive this forward. Now, if we look at what small business owners are looking for from an accountant, and this is a survey that was done in 2018 in the US, and it pretty much shows, and I'm not going to get into the validity of surveys, but we're just going to look at the major challenges that accountants are facing when talking to small business owners. And pretty much it's clear that most small business owners today want more for less. And that's a very simple statement. They want, and if you look at the numbers here, 78% are looking for us to be a trusted advisor. Now, that's a very nebulous term, but effectively, that means they want somebody, an intelligent friend, a critical thinker who's able to listen to their issues and challenges and be there in a safe environment to be able to give them honest feedback on their business, honest feedback on their thoughts, and somebody where they can share the issues and challenges that they're going through. And most small business owners don't have anybody else to talk to. Business is a lonely place. If you think about it, most small business owners, their friends are either employed, and so they don't understand the issues and challenges they're facing, or if they are self-employed, they often are playing a game. Nobody can really share and be honest with one another because everybody's taking a PR approach and making the best possible statements about their own business. And so often it's very hard to share issues and challenges and where you might appear slightly weak. So being able to do that in a very safe environment, which is what we as accountants can provide, is a fantastic place to be in business. Now, what we want to try and get across here is that every single accountant has the inherent skills, ability, training, and skill set to be able to help accountants with, or to be able to help small businesses with all the challenges that they face. Accountants are the front line for small business. They are the ones that have all the skills to be able to help small businesses and move that needle of success, moving it from 4 or 5 out of 10 failing to making that number stronger and better. And accountants, as Prince Charles said, could save the world. Well, we've changed the tone here a little bit to say change the world. Save the world might be a bit dramatic in some circumstances. But when he said that to the ICAEW, everybody laughed at him. Well, in all honesty, accountants are best placed to help small businesses and best placed to help them survive and thrive. Great. Okay, so what does this all mean for you? That's all very well, Ainsley. We've got the background, we've got the understanding, we understand what small business owners are looking for. What does that mean in practice? How do we put this into play? And how do we use QuickBooks and Clarity to enable us to do that? Well, let's look firstly at the biggest challenges facing accountants and bookkeepers and advisors. And pretty much most accountants are suffering from a downward pressure on pricing. It's very easy to enter the world of accounting nowadays with cloud technology. It's easy to set up a firm. It's easy to offshore or outsource some of that compliance work. And so we're seeing a huge proliferation of the number of firms that are being created, especially in this cloud world. Now, it used to be that there was a downward pressure on just compliance work, but now we're seeing there's also a downward pressure on added value services too. Now, accountants are going through massive issues and changes with regulatory and legislative changes and having to keep on top of those, and also having to keep their clients in check as well and making sure that they're on the right side of the law. And all this is leading to a huge pressure on time. We've seen that even over the last 6 to 9 months, tsunami, deluge, overwhelm are the words that our members were talking to us about, the work that they needed to do to help their clients during the first lockdown and with all the government stimulus packages. And that's just exacerbated the problem. But small business owners, effectively, it's been a perfect advisory storm. Small business owners have been asking for the help that they have effectively needed before, but they're screaming for it now. Help with projections to apply for loans, understanding of their future cash, understanding their costs, what can they cut. All the things that they've been asking for now have been particularly important and areas that they're going to need help with going forward. So all of this really has led for new revenue streams are required for accounting firms. It's been difficult to scale advisory. It's been a tough nut to crack in the past. And that's we'll show you why that's been the case. And we also understand about technology and technology changes, how that's having a massive play on accountants too. So all these challenges coming in and affecting accountants. Now, we've been told for 15 years or more that compliance is dead. We need to move from compliance to advisory. That's been the mantra for a long time. We know compliance isn't dead. It's not dead. Accounts, small businesses are always going to need help with their accounts. They're always going to need help with the regulatory minefield that the government keeps changing and the legislative changes on tax particularly. So compliance isn't going to be dead. But for most of it, it's going to be how do we combine both compliance and advisory going forward. And when I say for most of us, it's that to achieve superior profitability just doing accounts and tax returns, you're going to need to do that at massive scale and huge scale because the margins are going to be cut. So to make sound profits going forward, it's going to be about how you understand the revenue mix in your accounting firm and how you're able to adapt your accounting firm for that revenue mix and make sure you combine the right element of compliance and advisory. And hopefully we can show you a route to be able to do that today. So all great, Ainsley, thanks. How do we get started? How do we help our clients double their profits? Well, I'd like to bring you to a little analogy about business advisory. And at Clarity, we think advisory and business advisory is like baking a cake. Now, here I've got a chocolate cake, a picture of a chocolate cake. I don't actually like chocolate cake. I'm not sure why I've picked and chosen chocolate cake. I'm a cheesecake kind of guy myself. But I think chocolate fondant is a particularly good analogy here because we've probably, most of us, seen MasterChef. Wherever we are in the world, we've probably seen MasterChef. And that chocolate fondant can be a nemesis of many contestants. It's very tricky to pull off, and you don't know whether it succeeded until you cut that cake open and that ooze comes out from the middle. So margins are quite tight. But if you look at it from a general perspective on baking, if you've ever looked or watched the Great British Bake Off or any other spin-offs that are out there, you know pretty much that baking is quite scientific. And if you're going to wing it, it's just generally going to end in disaster. So to do really, really well at baking, you need to have the right ingredients. You need to measure them really carefully. You need to follow the recipe religiously, the method or the recipe, however you want to call it, religiously. Otherwise, again, doomed to failure. And when that cake is in the oven, how many times do you see them on the floor peeping into their ovens? Because whilst that cake's baking, you're needing to measure and monitor what's happening, and you need to adjust timings and temperature to match. So pretty much how we understand with baking is the same for business. Now, let me put that into a little bit more of a scientific framework rather than a woolly analogy that I've given you for baking. So if you want a framework that pretty much works for every single advisory engagement worldwide, then we've got one here for you today. Now, this framework is both for business advisory, tax advisory, wealth management advisory, marketing advisory, time management advisory. Any advisory engagement you can think of follows this exact same framework. And this framework is also the same framework that is used by big multinational consulting firms like Bain, accounting consulting firms like Accenture, and right down to small business advisory firms as well. It's exactly the same framework. And the framework is pretty much as simple as this. It's about understanding where your clients are now and helping them understand where they are now. It's about helping them understand where they could or should get to. It's about calculating the gap between where they are to where they could get to, creating a plan to help them close that gap, and then measuring and monitoring results versus the plan. It is no more difficult than that. And every single advisory engagement worldwide follows this exact same process. Now, of course, depending on the size of the client or the size of the engagement, we can go light or we can go deep at each level. But every single client can have this level and this framework applied to them to deliver and help them double their profits. Now, I'm going to take you through a framework that works with both QuickBooks and Clarity. It works at a light level. So this is pretty much for the 80% of small businesses that currently get only a compliance service. So if we think of it, our normally top 10 or 20% of clients inherently get good business advisory support and advice. They're paying good fees. They're in regular contact with the managers or partners. Questions get asked backwards and forwards. As an accounting firm, we understand their issues and challenges. We understand what they're looking for and we deliver it. That's the top 10, 20%. So whether we have a structured framework or not, they are getting pretty much business support, business advisory services, and it's done in a way that may or may not be structured. But the vast majority of our clients are just getting an accounts and tax return service. So this is a way for us to deliver help and support to those 80% that are desperately looking for it. Remember, 78% wanted a trusted advisor. We're probably looking after 20% inherently and automatically. So that leaves 60% of our clients that are looking for a trusted advisor, looking for advisory services, looking for business support services, and we're currently not giving them that help and support. So this framework that I'm going to show you today works for those 60% in a way that engages your team. It's scalable. We're not over-delivering. We're doing enough that creates massive value for the clients in a way that's profitable for the firm, but in a way that enables us to leverage technology, engage the entire team, and do it in a way that's profitable and effective and efficient and scalable for the accounting firm. Sounds like a big ask, I know, but it absolutely works, and it works still to this day. Now, when most of us think about advisory, we are jumping straight through to point 5, which is measure, monitor, results versus plan. So whenever you think about business advisory tools, you're thinking reporting, dashboards, forecasting, and it's all in this level 5, or maybe creating a plan. So it's between 4 and 5, and everything is focused in that area. We're forgetting this huge amount of services that we need to deliver up front to help the client understand and to bring the client with us on the journey. As accountants, we often know the solution and we jump straight through to solution. The client doesn't get where we're going. It doesn't understand why we need a cash flow forecast. And by us saying, oh, you need a 3-way projection, you need dashboards, you need a Fathom report, you need a Spotlight report, you need a Futurely report, that's what you need. The client's saying, do I? I don't know. I'm not sure. How much is that going to cost? I don't really understand the value, and I'm just going to say no. And this is our issue and challenge with business advisory in the past. We've jumped straight through to solution, and we haven't taken the client or the team with us on the journey and shown the value, shown that we understand where they want to get to, understanding where they are now, that gap, and helping them create an action and financial plan to close that gap. So let's bang on. If anybody's got any questions, please just drop them in the chat. Of course, Kelly's going to be monitoring it and she'll interrupt me. If everything's good, just say, all good, I've got it, yep, understood. No issues or challenges, that's good to let us know too, so we know we're on the right track. It's hard, as I said, when we're doing this over Zoom to understand if we're going too fast, too slow, whether it's sinking in, whether it's not. So please let us know if it's all good and we can move on, or whether you're got some questions that you want to go through. If not, I'll just bash on. So This framework is going to help you double your clients' profits, and it's worked in the past, and it's worked in practice that we've used for many, many years and continue to use. So helping your clients understand where they are now, very simple to do. These are the 7 key numbers that every single business owner should know. Now, and I can tell you why that's the case, because as an accounting firm, these 7 key numbers are critical for your firm. I actually only need 1 number for your accounting firm to know how your firm's structured, how successful it is, how efficient it is, and what profit margins you're probably on. And that's revenue per employee. If I know your revenue per employee, I know a huge amount about your accounting firm. Now, of course, if I had all 7 numbers, I would have a massive picture of your business. Now, these 7 key numbers affect profit and loss, balance sheet, cash, and efficiency. A complete snapshot of your business in 7 numbers. Now, of course, people will say, oh yes, Ainsley, but maybe gross profit doesn't apply to my business because I'm in a rental business. Well, maybe it doesn't apply wholly to your rental business, but potentially, maybe you're not accounting for your true costs of rental above the line. And perhaps if you were to, this number would become more relevant. So certainly for pretty much all businesses, these 7 key numbers are absolutely critical. And we know this, revenue, obviously for obvious reasons. We know that revenue is one of the most important numbers, and the fastest way to grow the bottom line is to increase revenue. We also know that's why coaches and entrepreneurial organizations that our clients join are all pushing top line growth. Now, we know pushing top line growth at the cost of everything else isn't potentially scalable or sustainable. And some businesses grow broke. We know as accountants how the right revenue delivers the right profitability and what revenue is profitable and what's not. So helping our clients understand revenue growth is critical, and it's a tool that, again, we have in spades. Gross profit for obvious reasons. We can help our clients enormously by breaking down their GP by product or service line. That gives us a huge understanding of what activities and what products and what services are contributing towards overheads. So again, a fantastic way for us to really, really understand how that business and the revenue mix in that business, how it's contributing to overheads, is a great number to start having discussions with our clients. Operating profit, again, for obvious reasons. Operating profit is the number that's used for valuations. It's used by financial institutions all over the world to understand affordability, loan repayments, you name it. Operating profit is that number they work on. And we need to be helping our clients understand the importance of operating profit. Revenue per employee, as I said, critical for an accounting firm. I know where that number needs to be for your firm to be generating a successful, profitable revenue stream for the firm. Again, important number for our clients, along with cash, the cash conversion cycle. These 2 numbers, we don't need an absolute number. We just need to be making sure revenue per employee is going up and the cash conversion cycle is going down. Cash conversion cycle is our cash days. So how long every pound we spend, how long it takes to come back into our business, into our bank account. And again, some businesses like Amazon might operate on negative cash days, but your clients probably have 30 to 60 maybe. If they've got creditors and work in progress and debtor days, then maybe that average works down to maybe 60, maybe 30. But that number, we should be helping them speed that up and get that accelerating through their business. Core cash target is a world-recognized number about how to create a sustainable balance sheet. And this is 2 months overheads plus taxes set aside. Now, can you imagine at the start of this pandemic, if your clients had 2 months overheads plus taxes set aside, how more secure they would have been over this current time? Now, obviously, it's a target to hit for. Small business owners generally don't have that in reserves. They strip their balance sheet, but it's a great number to be starting to get clients to think about. And it also helps us understand if there's a funding gap. So if we're looking to grow the business and we're looking to scale this business, what does that core cash target look like? What cash have we got in the bank? Are we able to fund any future R&D? Are we able to fund any future distributions to shareholders if that cash target is low? So it gives us a great understanding and feel for funding gaps and funding plans as well. And business return is that awkward number where we sometimes might want to be careful and tactful how we describe that to our clients. We don't want to call anybody's baby ugly, but certainly this gives us a good indication if that number is low, whether our clients should be just putting the money in their bank account and earning interest on it, or because considering all the risks and hassles that they take in business, is the business generating sufficient return for all that time, effort, and money and risks that are put into that business? Or are they generating 25, 30% business return and therefore really pushing it, and something that they should be continuing to scale to grow that business? So these 7 key numbers give you an amazing oversight of your client's business in one screen. They also give clients an amazing ability to understand their numbers. Now, most small business owners can't afford to pay for a key performance indicator exercise, so KPIs. So these effectively are a great set of 7 KPIs that you can introduce instantly to give your clients a really good understanding of their business. Now, these 7 key numbers, there's only 7 of them, so don't need to wade through information in the accounts. These 7 numbers do that for you. It's only 7 numbers that your clients have to learn, and it's only 7 numbers that your team have to learn how to explain. So between the 2 of them, they should get a really good understanding of the business and to be able to measure and monitor it as it's going along. So I hope that's given you a really good insight. We're stripping back the complexity in business. We're helping our clients understand their numbers. We're helping them get a key set of numbers that gives them a really strong picture of their business. So if we're all good, I'll continue on. So if you just want to say yes, thumbs up, Ainsley, I got it. Or if you say, oh no, there's other key numbers that they should be understanding, then let's talk about those too. I think, let's be honest, there will be other numbers that will affect your client's business. And there will be non-financial numbers and key performance indicators that are non-financial that will be important that you discuss with them as they're going along. But this is a great starting point. So absolutely, there will be other numbers, but this is a great starting point and a great way to get them to understand what's happening in their business. Good. So I've had no objections so far. Let's move on. In fact, we've got a very quiet crowd here today. So you're lucky you're not in the room with me. I would be throwing a microphone at you and trying to get you to contribute to this. But I can't do that remotely. So I'm going to just have to keep asking and hope that you contribute into the chat. So, okay, we've understood where our clients are now. Now let's look at where should they get to. So you remember those exact same 7 key numbers that we talked about? Well, lo and behold, those 7 key numbers play a very important role too in the key levers of success of a business. So again, bringing simplicity to play here. This is not about overcomplicating and supplying our clients with information. This is giving them complete simplicity and doing it in a way that helps them understand their business. As accountants, too many of our clients would say to us, potentially, and certainly I've had this in practice, where they say, oh, Ainsley, I'm useless at numbers. That's what you're here for. And as accountants, we often say, oh, yeah, absolutely. That's why we're here. You leave the numbers to us. You focus on the business. But in effect, we're doing our clients a massive disservice. They need to understand the financial implication of every decision they take. They need to understand what actions drive what numbers, what actions drive what levers, what drive what to profit and cash. And effectively, with these 5 levers, they get a huge understanding of which areas drive profit and cash and how much each lever drives profit and cash. Gives them a huge amount of understanding about where to put their focus on. So this is about understanding the 7 key numbers, the 5 levers in their business, how those 5 levers affect profit and cash and how much they affect profit and cash by, where the focus should be. And then we can understand, again, this is on a regular basis. They're not going to get this all in one go. But if we're regularly talking to them about the 7 key numbers and their 5 levers, they can understand what actions affect what levers and what actions are affecting what, having what impact on profit and cash in the business. So again, a great way for them to really get to grips with their main dials in their business and the main levers in their business and understand the activities and actions they're taking and how that's having an impact on their bottom line. So great way. Now, to understand where they should get to, a very simple way to do that is to play sensitivity analysis on those 5 levers. So what happens if revenue increases? What does that do to profit and cash? By how much does revenue need to increase the profitability? Or if revenue increases by 5%, what does that do to our profit and cash position? What happens if revenue goes down? What does that do to our current position from a profit and cash perspective? And again, very simple, 5 levers. Now, of course, revenue could be made up of the average transaction value by the number of customers. So of course, we can break down these levers into more levers if we want to. But again, this is a great starting point. It's all about making business simple, simple for our team, simple for our clients. We can scale and systemize this. This is not about making business complex. This is not about putting in complex systems and processes and procedures that the team can't follow. This is simple stuff that works and simple stuff that we can get everybody involved and engaged with. So can you imagine on each of these levers, if you were to be able to show your clients the impact on profit and cash and what effect it was having on profit and cash, then that gives an amazing ability for them to understand which areas they need to put their focus into first, because obviously all would need attention, but what are going to get those quick wins and what they need to do to generate those quick wins. So an amazing way for us to help our clients understand where they could get to. Now, of course, depending on the size of the client, they might need a strategic planning exercise. They might need far more than just that simple sensitivity analysis. But again, a great place to start and a great way to get them thinking about what's possible in their business. A lot of business owners lack vision. And this is how we can help them understand what's possible in their business so that they can understand that maybe it's not about making significant changes across every area of business. It's about making simple, small changes together combined that can have a massive difference. This is the power of marginal gains. So when you've heard about it in sports, in British cycling and British swimming, the power of marginal gains, those 1% each and every day combined can have a massive impact. And this is what we can show our clients. So if they say to us, oh, Ainsley, I'm not sure I want to grow, they might be saying, oh, I'm having a lot of hassle in my business with cash and with my team and with clients. I don't want more hassle. But if we can show them that by making simple, small changes together combined, they can have a massive difference to their bottom line, then maybe they can understand it's not necessarily always about business growth. The next one is the gap. And this is easy for us as accountants. We get this. What's the gap? So where am I now? Where could I get to? What's the gap? So this is the original numbers. These are the revised numbers. And this is the gap. Simple for us to do. We get this in spades. Now, the beauty about what we can do as accountants to this is add critical thinking. This is where our understanding of patterns in numbers and our understanding of numbers themselves and percentages plays a huge role. Because if that client's been running at a 5% growth rate for the last 10 years, and they suddenly say, oh, we're going to go 100% this year, you can ask them with a critical thinking mindset, oh, that seems a bit high. How do you think that's possible? Is that really possible? You've been doing 5% for the last 10 years. Why do you think you're going to double your profits or double your revenue this year? So we bring critical thinking to this gap analysis, and that's an amazing skill set. We don't need to know the answers. We don't have the answers. Nobody in business has all the answers. We couldn't possibly be expected to have the answers. What we're doing here is asking the right questions. We're firing the client's imagination. We're lighting the fire under them, getting them thinking about their business in a much different way. And we're helping them challenge what they're doing and challenge how they've always done business to make sure that they're doing the right things and that they continue to do the right things going forward. But in addition to us giving critical thinking here, we can also add an extra dimension. We can show the gap and what that gap is having an effect and which element is having an effect on profit and cash. As I said, that's the beauty about what we can bring to this equation, is we can show them that sensitivity analysis. We can show them which areas are going to have a bigger impact on profit and cash. So we know time is limited. Everybody is limited in time. Where should we focus our efforts? Well, this gives us a beautiful ability to help our clients direct their efforts in the right place with a limited resource, which is time. So fantastic skill set that we have and an ability that we have to be able to help. So we've understood where they are now. We've understood how we can see how they can get to a different place. And we've understood how to measure that gap. And we get that entirely. So now it's about creating a plan. And the plan is two-way here. The first one is the typical financial plan. I'm not going to go through that here. You know how to do this. You know how to use tools to do this. There are so many tools out there. In Clarity, you can build a financial plan, a simple 12-month P&L plan. Yeah, there are other tools out there, as you know, like Futurely and Spotlight and Castaway, which help you do a three-way projection. There are other tools that help you with cash. So, for example, Fluidly or Float are particularly good from a cash perspective. And if you're looking at a cash projection or a theoretical cash projection, you've got Predict, and you've also got Futurely's Advisor as well to generate three-way projections. So there's a huge number of those tools that help you do this. And of course, I'm not denigrating Excel here by any stretch of the imagination. I appreciate that for some businesses, they are complex. It does require the human input to create that projection or plan. And Excel sometimes is the only tool that is good enough for those bigger businesses that have more complex needs. But in reality, small businesses can't afford to pay your time to do a bespoke Excel model. And sometimes good enough is good enough. As accountants, we always strive for perfection. So we need to know the tax treatment and we need to know the accounting treatment of almost everything. In business, we need to think perfection can sometimes be costly, too costly, and can be hard to achieve. So sometimes good enough is good enough. And for some clients, last year plus 5% is as good a starting point as any. Not a great business plan by any stretch of the imagination, but it's better than having nothing. And us helping our clients generate a business plan that's not based on last year plus 5%, which you can do within Clarity and do it efficiently and effectively, is a great solution for many small businesses. Now, in addition to the traditional financial plan that you're used to building, it's really also important to build an action plan. And here at Clarity, we believe strongly in who, what, when action plans. So this is important for you as a team as well. Don't take long minutes of meetings. Simply take actionable results that are going to happen at the end of the meeting. So who is going to do what by when? This who, what, when approach helps with accountability, it helps with responsibility, and it helps with focus. So focus, responsibility, accountability are delivered in spades with a who, what, when action plan. And we need to get our clients always thinking about a who, what, when action plan. And we need to be that stick to be able to hold them accountable if they let us, and say to them, these are the 5 things you were supposed to do last month. What did you do and how did it go? And those that you didn't do, why didn't you do them? And do you need help doing them? Bringing them back to why it's important that we created those actions in the first place, bringing them back to the levers in business, the focus, which areas they were focusing on and why that was important and why they were going to do those 3 things. This really is an amazing tool for both the business and the accountant to be able to drive, as I said, focus, responsibility, and accountability. And we know that small business owners with written goals that are held accountable achieve 78% more. In fact, in practice, I thought it was way more than 78%, but let's just assume it's only 78%. Okay, we've created that action plan, we've created that financial plan. Now it's about measuring and monitoring results versus actual. And the first part of that is oh so easy. It's again, everything that we know, comparing budget to actual and calculating that variance. Now, when we've got a variance, there's probably only 3 reasons we have that variance. Firstly, did we not do stuff, or did the client not do that stuff that they should have done? Did they do it, but not in the right way, or could it be done better? Or thirdly, is the plan wrong and the plan needs changing? Now, we can't have a changing plan every 12 months. That would be ridiculous. But we can certainly make sure that when we do need to change the plan, because that variance is going to roll over month on month on month, and we're going to have to keep discounting it from the conversations, that's the time to change the plan. So don't change it every 12 months, but when it does need to change, please change that plan. But budget versus actual is very simple. It's a simple tool that we can go through with the client. Why is that number moved? What did you do that you shouldn't have done? What didn't you do that you should have done? And is the plan wrong in the first place? And the last question is, what are you going to do about that? So again, great way for continuous improvement and measuring and monitoring as we're going along. And the other one is to measure and monitor that action plan. Get accountability, have that accountability stick permission from your client and hold them accountable. World-class athletes often have coaches. They don't have coaches necessarily to help them kick, throw, or hit the ball better. They have a coach to keep them focused, to keep them accountable, to keep them on track, and to give them a critical thinking and a critical mindset and input into their game. And that's exactly what you can do for your clients as an accountant, and a great skill set that they will hugely value. So I hope that's given you a really strong framework. It's given you the framework that is used worldwide for advisory, but it's broken it down in a way that you can use for those smaller business clients and do it at scale and do it in a way that's cost effective for you to deliver, profitable for the firm, but also hugely valuable for the client. And if you're looking for, and do take a screenshot of this, if you're looking for where you can go slightly deeper, then I've given you that here too. So as I said, in this framework, you can go light or you can go deep at each area, depending on the size of the client or the size of the engagement. We've shown you how that you can, a process that you can do for pretty much 60% to 80% of your clients. There will, of course, be those clients that need more help and input. And here you've got a way to, at each stage, go a little bit deeper. And again, we can help you do that too. So, any questions? Does anybody have any feedback or questions? Is anybody disagreeing? That's a stupid framework, Ainsley, that wouldn't possibly work with our clients? Or do you think absolutely this could be a way to help our clients grow? This is a tool that could work for us. If you could drop that in the chat, that would be good. Obviously, if you've got any other questions, happy to understand those too. And if not, we can move on quickly. We don't want to waste time. We appreciate your time is as precious as your clients. Okay, so I think we've got a very quiet crowd today, Kelly. Shall I just move on? Okay, so how do we put that into play and what are the next steps for us as a firm? Okay, we talked about thrive. Everything that we do at Clarity is built about helping you and your clients thrive. It's about putting you at the center of everything we do. And everything is focused on pretty much more money, more time, more freedom. This is pretty much why everybody goes into business. This is why your clients have gone into business. This is why probably you have gone into business. It's all about more money, more time, and freedom. In different proportions, granted, and different people will have different drivers, but these are pretty much the three that will focus on everyone. And from an accounting firm perspective, we focused on the pillars of people, process, and clients. Now, you will have heard me say that people, process, and technology were critical from a delivery of technology perspective. But when we're looking at the wider firm and the wider practice, it's all about people, process, and clients. Clients obviously play a massive impact in that. And everything that we do is focused around these areas within each of these three pillars. Now, it's really important for you as a firm that you create your own plan. This is about fitting your own oxygen mask first. Accountants are classic. They're like builders. Their own houses, they focus on other people's houses before their own houses. And accountants, it's an admirable trait that we love to help our clients, and we over-focus on our clients often, and sometimes to the detriment of our own business. So this is about helping you create your own plan. We've got a calculator, and the link is there for you to use that calculator. You don't have to enter any personal details, so it will not be tied to you. You can play to your heart's content with that calculator and come up with a really decent plan, a really good understanding of where you are now and where you could get to and what that gap is. So you can do that gap analysis for your own firm. Of course, you can use QuickBooks and Clarity because all your bookkeeping data feeds directly from QuickBooks straight into Clarity and done very simply and very easy with a wonderful API. And that will give you an ability to use Clarity for your own firm, understand your own 7 key numbers, understand your levers of success and what you need to do and what lever moves what in profit and cash. How about the gap, helping you calculate that gap, helping you create an action and financial plan to close that gap, and giving you a tool to measure and monitor actual versus budget, the plan versus what's actually happening. So all that can be done using both Clarity and QuickBooks together. Great seamless service for you, for your own firm, but also for your clients too. So start with your own firm first. Go and create your own plan using the calculator. And of course, if you want to sign up and use Clarity, then definitely use Clarity on your own firm first too. Now, we also have a great Thrive scorecard, which looks at all these areas of people, process, and clients. It's a great tool for you to be able to understand where the gaps are in your business. And this isn't just from an advisory perspective. This is absolutely too from understanding the whole firm and where you are set up to thrive. Now, I'll be honest, the scorecard's quite brutal. It's very hard to get high scores here, but the tool will give you a great set of understanding of what's needed to drive the firm forward. So don't be surprised if you don't get 95%. 60 to 70% is pretty strong score for most people who do that scorecard. But it will give you really good insights into where you are now and what you need to do to drive that firm forward and to absolutely make that firm thrive for both you and your clients. Obviously, we've discussed that tool, that API between QuickBooks and Clarity. All your bookkeeping data is transferred seamlessly into Clarity, where we scrunch and work those numbers. You can see all your clients on one screen. So for example, you'll be able to see the key metrics across your entire client portfolio and get a great picture of where all your clients are now. And you can drill down into each individual one, into each client, and do that gap analysis, where they are now, where they could get to, what's the gap, create a plan, both action and financial, to close the gap, and also help you then measure and monitor results versus the plan, all within inside Clarity. And any changes you make inside QuickBooks are automatically reflected within Clarity. So the data is refreshed every 24 hours overnight, but you could also automatically call a refresh whenever you need it. If you've made changes to the underlying account structure or chart of accounts, or you've made any journal adjustments inside in QuickBooks, you can bring that into Clarity whenever you need to. So the tools work really, really well together to give your clients an amazing picture, a great understanding, great management information, bite-sized information to be able to help them understand what they need to do to take their business to the next level. And we have used tools like this in the past, and we continue to use tools like this that really, really help clients double their profits. Now, for those of you that maybe aren't sure yet and maybe want some more information or want more help, then we've got a number of ways that you can do that. Firstly, we've got a wonderful Thrive workshop. So I would encourage you to do the calculator. I would encourage you to do the Thrive scorecard, get your success factor. And on this workshop, it's effectively a day's workshop. We've broken it down to and reimagined it for how it would work online. We've broken it down into 4 sessions. And this workshop is really, really built around this very tight loop about online learning, implementation, and accountability. Learning, implementation, accountability, learning, implementation, accountability. We've had a number of success stories through this workshop. We've had people saying they've never, it's opened their eyes about their practice. They've never thought about their own firm like this before. It's given them an amazing ability and an amazing understanding, and people have been just enjoying it. It's great to connect with other accountants. We haven't probably done workshops face-to-face for a long time, so it's a great way to meet with other accountants who are in the same boat, who are trying to achieve the same, and it's a great way to share and collaborate. So works really, really well. That workshop is priced at £497. We have that down for you today for £97 plus VAT. So a really great price. There's a huge amount of surprises that you'll get on the workshop too. So there'll be lots of goodies and surprises along the way. So really, really worth doing if you're looking at understanding how you can make your firm more profitable and how you can help your clients do the same thing. So a great way of practically supporting you and helping you kickstart your journey into moving the firm forward. Of course, if you don't want to do the scorecard and you don't want to do the calculator and you don't want to do the workshop, but you want to find out more information either on Clarity or any of the things we've discussed today and about how you can help your firm move on to the next level, then please, you can take a photo with your phone of that QR code and that will take you through to the Calendly link, or you can just use that Calendly link as we've got here. Now, of course, we'll be following up this workshop or this web event with the copy of the slides, and we'll give you all the links that you need to be able to take action. So don't worry, and we'll follow you up as well because it's important. You're going to understand as an accountant, the art of follow-up is critical for success. I hope you've had a wonderful web event today. I hope you've enjoyed it. I hope it's given you a huge amount of information. It's given you some ideas to be able to drive and move your practice forward, to be able to help your clients do better. And of course, Kelly and I are both here to help you understand how you can make your firm more successful, how Clarity and QuickBooks work seamlessly together to really use the power of cloud to help your clients and take your clients to the next level. So thank you so much for being here. I've really enjoyed this session today.
Thank you, everyone. Yeah, that's been fantastic. Thank you, Ainsley. And I'll be in touch with everyone individually just to get some feedback as well.
Fantastic. So we happily, there's people still on, so we'll happily stay here and answer any questions you've got if you want to ask us any questions. If not, we'll wind it up and say thank you so much, and we look forward to seeing you soon. Thank you.